Okay, so on today's podcast, we're going to talk about changes to the buy now, pay later sector. So think of companies like Afterpay and Zip. And given the stats of how popular this service is for young people, and given who listens to this podcast typically, I'm sure that people listening know exactly what this is. But I want you to give us a quick overview anyway. What is buy now, pay later?
So buy now, pay later is a financing option that allows customers to pay for items in multiple installments rather than upfront. So it basically means that you can pay partly for something, but you can get that item straight away.
Yeah, and there's no interest normally on those payments, right?
Exactly. And that's a key benefit to this, that there is no financial penalty for paying for it over time. It's completely free of charge unless you don't pay it back in time, then there is a fee, and that can result in a debt. But I guess when you think about loans, you think of the interest that comes from that. This is not like that because there's no interest there. So it is really popular for that reason, especially amongst young people.
Yeah, it's interesting thinking of these companies and how they make money because, of course, these companies are worth billions of dollars, and a big chunk of their revenue comes from actually merchants. So that shop that you bought the dress from, they pay to offer Afterpay to their customers. And that's kind of the way they're making money rather than charging consumers for the transactions every single time. Of course, if you've got some late fees, that's when you get hit with a fee. It's interesting looking at these companies because, you know, they make billions of dollars, where that money actually comes from, especially because they're giving customers interest-free loans, essentially. And the answer to that is predominantly that they charge merchants. And merchants, so let's take your dress for an example, the merchant could be The Iconic. And so they'll convince The Iconic to take them on as an offering to their customers. They'll pay a fee on either the number of transactions or maybe even a monthly installment. And The Iconic should see their sales go up because they offer Afterpay or Zip.
Yes.
And so that's the business case they're putting forward. So who then is the customer that's using BNPL?
So according to Australia's Reserve Bank, about 7 million Australians have used buy now, pay later to purchase something.
It's a massive group of people.
It's massive. That's about 1 in 3 of the adult population in Australia and about half of the employed population.
Right.
So it's a significant proportion of Australians that we're talking about here. And in terms of who these Australians are, it's Australians between 18 and 39 who have, on average, just under one buy now, pay later account each. Although to note there, some people in this age bracket have multiple accounts, and we'll explain why a little bit later. But that's why that number sounds really high. And in terms of those who are a bit older, those over 65 are the least likely demographic to have an account. So this is really young people who are using this service.
And do we have any other insight about what kind of financial habits an average BNPL holder has?
Yeah, well, interestingly, there's some other research from the Reserve Bank of Australia that shows that if you have a buy now, pay later account, you're less likely to have a credit card than someone who doesn't have a buy now, pay later account. So according to the RBA, this reflects that some customers who might not be eligible for a credit card might actually be using a buy now, pay later account instead.
And I'm interested to tease that out a little bit more with you when we get to what the government has proposed, because that's kind of one of these key points of tension.
Yeah, so we'll come back to that. But one more thing that I want to add is that a 2022 survey by Monash University found that those experiencing financial stress are 75% more likely to use buy now, pay later systems. So it's particularly used by Australians who are experiencing financial stress.
Okay, and the remarkable thing about this financial product is that it's kind of come from nowhere. I mean, this is quite new on the scene. When did it kind of burst into everyone's financial planning?
Yeah, it has become very popular in the last decade or so, but especially during the pandemic, which is quite interesting, I think. So just in 2020, again, according to the Reserve Bank, buy now, pay later services grew by over 50% in the second half of 2020 compared to the same period a year earlier. That is a huge growth in this industry. And in the last financial year, the value of buy now, pay later transactions was about $19 billion.
And I think if you're a regular listener to this podcast, there's this theme that emerges, whether we're talking about buy now, pay later or AI or other kind of emerging areas of tech especially, that the law takes a little bit of time to catch up. And, you know, there's this sense of the law is always a few years behind and they're constantly doing reports and investigations. And now they have actually come out with a position on how buy now, pay later should be policed, right?
Yeah, and the government says that in this policy. They say that the growth of the buy now, pay later sector was not contemplated by policymakers who were drafting our credit legislation.
So that's the legislation that governs things like a credit card. And there's quite strict regulations around that. I mean, it's not an uncommon experience to be rejected from a credit card application, for example.
Yeah.
So now let's get to the BNPL legislation. What does it look like?
Hello, I'm James and I produced the video you're watching. If you're enjoying what you're watching, we'd love it if you considered subscribing and checking us out on our other platforms. It'd really help in getting the word out about what we're doing here at TDA. Thanks very much, and now back to the deep dive.
So like we said, buy now, pay later is not right now regulated under the same frameworks as credit card companies, and they actually fall under the exemption part of the Australian Credit Act. And this has made it easier for consumers to use buy now, pay later because it doesn't require the same approval as credit cards or loans, which check a person's credit history. So basically, the Credit Act is designed to make sure that someone is in the right financial position to use a credit card, and that is not a requirement for buy now, pay later services.
Got it.
And so policymakers have identified a few key concerns here, including excessive late payment fees and lack of warnings about using the services. And we mentioned before that some people have multiple accounts.
Yeah.
One reason for why that could happen is if you get banned from one account because you've accumulated too much debt, and then you just open another account with another provider. And again, you can accumulate too much debt there, and then you just keep going from provider to provider. And at the moment, there is no law that stops that from happening.
Right, that's a really interesting point because they're designed to make sure that you don't go into too much debt. They'll kind of cut you off if they can see that you're an unreliable person to pay it back. But there's nothing stopping you from going to a couple, and all of a sudden that debt does become overwhelming. So what's the government doing, or what's the government proposing rather, to actually do about all of this?
So it's proposing to take buy now, pay later schemes out of the exemption list under the Credit Act, meaning it will be regulated under the same laws as credit cards. Now, what does this mean for consumers, for the people listening? So it means that buy now, pay later providers could need to check a person's credit score and also assess whether a person is financially suitable to pay back the credit that they're accumulating. And basically what the government is saying is that they are trying to protect financially vulnerable consumers from accumulating debt.
What has the government said about why this is so important?
So Assistant Treasurer Stephen Jones, who is the person who has introduced this to Parliament, basically said, like I said before, this is all about making the market a safer place. Here's what he said on the ABC yesterday.
We want to ensure that those consumer protections that we think are necessary for credit products apply to the buy now, pay later sector. And when we put in place these new laws, that's exactly what will happen. It'll ensure that we maintain the great innovation and competition that the buy now, pay later sector has introduced into credit markets, but the same consumer protections will be in place as well.
And also just a quick note that TDA did reach out to the opposition for comment, but we didn't receive a response at the time of recording this episode.
And as with any story that we try and do on this podcast, I do think it's important to explore some of the balance in this and hear from the buy now, pay later companies themselves. Have they come out with statements since all of this has been released, and what's their position on their role in consumers' lives?
Yeah, so unsurprisingly, there's quite a different story from Afterpay, which we've mentioned, and they're one of the major buy now, pay later companies. So they've told a really different story on the role they play in consumers' lives. They released some of their internal research yesterday that showed that 1 in 3 Afterpay users cited improvements in their financial management while using the service. And they say that 25% said it allowed them to save more.
Right.
So they're basically saying that they're actually helping people financially, not disadvantaging them further.
Okay.
And in terms of the company's response to the government's proposal, when this legislation was in an earlier draft phase, they submitted some feedback and they said that they should only have to conduct partial credit checks. But also importantly, they did acknowledge concerns that this could allow consumers to hide debts with other providers.
And so a partial credit check could look like, touching base with one particular government agency to see if you have a debt there, or it could be like if you've got an unpaid parking fine or something. But it's not a full credit check that's being proposed by the legislation, which would be as if you're applying for a credit card. I think we'll leave the conversation there, though. Thanks for joining us, Billy, to explain that. And thank you for listening to the Daily Aus. We'll be back again in your ears tomorrow morning. Thank you so much. We'll speak to you again tomorrow.